How's it going, guys? Jonathan, the mentor here, back at it again here with another video. And in this video, we're going to be going over trailing your stop losses, right? Why risk to reward is very important when it comes to, making sure that you're protecting not only your profits, but also protecting the amount of money that's in your account, right? So in this video, we're going to be going over trailing your stop loss. And if you haven't done it yet, I highly suggest that you guys go get the book, right? Fluent in Forex by me, Jonathan, the mentor. You can go on gumroad.com. If not, you could actually click the link in the description below where you could actually find that link. And it's going to pretty much give you the language behind Forex. So that way you become a more experienced trader and the understanding of how abbreviations work and, how the markets move fundamentally, technically, and you're going to love it, right? Because we break it down. We decipher the information for you guys to understand it on a much easier level. Okay, guys. So real quick, I'm going to go with one of my chapters here. Okay, I'm going to share my screen with you guys real quick. And I want to go over one of my chapters here in the book. Okay, Fluent in Forex. So chapter 7, we talk about risk management. Okay, I'm going to go over risk management. Okay, risk management terminology. So before diving into the strategy, let's familiarize ourselves with some risk management terminology. All right, you have a thing called risk capital. This is the amount of money you can afford to lose without affecting your financial well-being or lifestyle. Okay, it's crucial to never risk more than you can afford. Okay, so always make sure that when you're risking money, that you're willing to take you're not willing to lose more than what you can afford, right? That's super important. Risk to reward ratio. Okay, the risk to reward ratio is measured of the potential return on investment relative to the amount of risk undertaken. For example, a 1-to-2 risk to reward ratio means you're willing to risk $1 to make $2. That's a 1-to-2, right? So if I'm risking $5 to gain $50, that's a 1-to-10 because I 10x what I was willing to risk, right? If I'm risking $10 and I gain $200, that's a 20x. So I made 20 times that amount. That's how the risk to reward works, right? I'm willing to risk 1 to gain 5. I'm willing to risk 5 to gain 20. All right. That's how risk to reward works. Stop loss. A stop loss is an order placed to limit potential losses. It specifies the price in which you are willing to exit a losing trade. So the reason why we have stop loss is because we want to, limit ourselves from taking losses, right? Major losses in terms of pip wise, right? And it's important that we have a stop loss because we're comfortable at this level. I'm comfortable with losing 20 pips. I'm comfortable with losing $50 on this trade, right? Some traders that are not experienced traders, they tend to not set a stop loss. They don't set a take profit. And then they eventually ends up blowing their account, right? And we don't want that to be you guys here, right? So this is the reason why we're moving strategically when it comes to risk management terminology. All right, next one is the take profit. The take profit order is placed to lock in profits as a predetermined price level. That means the price that you're willing to get out and take money at, right? So I have a stop loss that if price was to reverse back on me, I'm willing to lose 20 bucks, but I'm also willing to gain 30, 40, 50, 100 bucks at this take profit level, right? So talk about putting your money on autopilot. The market's doing the work for you and you're comfortable with what's happening because you made the commitment to using the right risk, right? And position sizing. This is a process of determining the size of each trade based on your risk tolerance and the distance from the entry to your stop loss. Okay, so I want to go over this. This is very important because we're actually going to draw up this chart here right after, really, dive deep into it. All right, position sizing. Determine the size of the trade based on your risk capital and the distance from your entry to your stop loss. A common approach is to risk no more than 1-to-2% of your capital on a single trade. All right, this is very important, family. If you are starting off, if you are the person that's about compounding your account, remember something, the market is always going to repeat itself. The market moves in waves. The market will show its hand again. There's plenty of opportunities based on the strategy that we've actually dived into. All right, so don't be the individual where you're willing to blow or spend 5% of risk, 5% of the overall account to blow it all. All right, because there's more trades that are going to do the same exact thing. So stick to your 1 to 2%. spread it out in a, over the course of 5 to 10 trades and let it compound, right? Greed is going to be the #1 killer as to why you don't succeed here in trading. And we don't want the emotions to get ahead of you. That's the reason why we talk about risk management, because we want to really teach you how to master those emotions, right? And it really comes down to risk. Stop loss and take profit orders. All right. Always use stop loss and take profit orders to manage your trade. Okay. These orders ensure that you exit a trade if it goes against you, and you secure profits when the market moves in your favor. Okay. So you always use stop loss and take profit orders to manage your trade. This is how you manage your trade the right way. These are how professionals move. This is how you protect your account. This is how you secure profits. This is how you take minimal losses. Okay, now let's go over here real quick, because this is what we're going to be going over. Trailing your stop loss. A trailing stop is an order that adjusts as the market moves in your favor. Okay, it locks in profits while giving you the trade room to breathe. This is especially useful in a trending market. So what are we doing? We're trailing our stop losses. And I want to give you guys an example on one of these previous trades that actually took off for us here. All right. I'm going to give you an example of a trailing stop loss. Okay. So let's say, for example, here, right, we're going for a take profit 1 location of about 35 to 36 pips here. We're willing to risk 1 to gain 1. That's a 1-to-1 risk to reward. Right. Remember, we talked about risk to reward, right? Willing to risk 1 to gain 1, to gain 2, to gain 5. So I wanted to risk 35 pips to gain 35 pips. That's a 1-to-1, right? Okay, super important. So now, in this case, this is a perfect example of why you want to trail your stop loss, because you can actually make more money swinging out the trade, okay, that can work in your favor. And let me show you. Price got into our TP1, took us out 35 pips. If you set a pending order and you woke up, you made money. Okay, you made 35 pips. Depending on what you were willing to risk, as long as it was 1 to 2% of the account, we'll give you the right amount of what it is that you've made based on the amount of money that you have in your account. Okay. Now let me show you this beautiful theory of trailing a stop loss and always being in profits, always securing the bag. Okay, so this is a very important factor for you guys to know here. Check it out. Price got into our entry. Okay, we have our entry price here. Okay, that's where the blue line is. We have our stop loss here. We have our take profit 1. Let me show you how to trail stop losses. When you are trading in MT4 family, it's super important that you are modifying your orders. Modifying. If trades is moving in the direction, in the overall direction, you want to modify your trades so you can either at least get into a break even or take profit. Okay, so in this case here, we have where price, right? Price got us out on a TP1. Right now, what if price, let me show you. Let's say price got close to our take profit. Right? What are we going to do? We're going to modify a trade. We're going to move what the initial entry price was. We're going to move. Okay, we're going to leave our take profit location open. No number, you delete it, open. And what we're going to do is, this is what we're going to do. We're going to move our stop loss to our entry price. So let's say if it didn't hit our TP1, which it did here already, but it decided to reverse back, guess what? It got us out at a break even. So instead of taking us out at a loss of 35 pips, it took us out and broke us even, which means that we didn't win a trade, we didn't lose a trade, but most importantly, we didn't lose the money that was already generated in our physical account, right? That's super important. Now, why do we do this? Because like it says here, okay, like it says here, A trailing stop loss is an order that adjusts as the markets moves in your favor. It locks in profits while giving you the trade room to breathe. This is especially useful in a trending market. Now, what we notice here is we have a trending market that is going where? Down. So what are we going to do? We're going to modify our trade. And by modifying our trade, look what happens. We left price open here. We left the what? The market an opportunity to breathe. We already did what? We already moved our stop loss that was here to our break even. Okay, so we're comfortable with price if price was to reverse at a break even because we didn't lose the account. We didn't lose no money. But look what happens. Price went up, had a major pullback. Price went down again. What am I going to do? I'm going to take that stop loss that was originally there, and I'm going to move it. I'm going to trail my stop loss. Trail the stop loss. Boom. Remember, now the trade is riding. It's going in the direction where we want it to. What happened? Price went down, went up again, had a pullback, went down. What am I going to do? After the pullback, after price goes down from the pullback, I'm going to do what? I'm going to take that stop loss now, and I'm going to trail it right here. Price goes down again. Has a pullback, goes down again. What am I going to do? I'm going to move my stop loss, and I'm going to trail it right here. What happened again? Look at this. These are patterns. This is a trending market. We're reading here right in front of us. A trailing stop loss is an order that adjusts as the markets move in your favor. It locks in profits while giving you the trade room to breathe. This is especially useful in trending markets. We have a trending market. So what happened? Price did a reversal, came down again. What are we going to do? We're going to trail our stop loss. What happened again? Price had a reversal, went back down again. What are we going to do? We're going to do it again. We're going to trail our stop loss. So what's happening is, instead of securing our original take profit for 35 pips, we're actually moving stop loss so we can accumulate more pips as we are riding in the direction of where the market is going. And why is that important? Because if price decides to revert and it comes back to where we trailed our previous stop loss, guess what happens? It took us out in profits, meaning we won this trade, we made more pips, we made more money, we minimized the loss, we minimized the risk, and now everything is profits all along the way. Okay, and look, and we can go down and we can see where price is currently at right now. Okay, price is currently at 87 pips. So imagine riding the market. Instead of taking 35 pips, guess what? You actually made 87 pips because you did a thing called trailing your stop loss, where you actually were comfortable with riding the market. So if price was to reverse back, it still got you out in profits rather than a loss. All right, family. So with that being said, I hope you guys got some clarity on why it's important to trail your stop losses and how it can actually work in your favor. And if you haven't done it yet, make sure you guys go get the book, Fluent in Forex by Jonathan the Mentor. You don't want to miss it. Link in the bio. Appreciate you guys. See you at the top. Let's go.